Good afternoon. Welcome to Options Tender. It is Thursday, June 13th, 2024. Thanks for joining us. If you're new here, go down to that bottom right-hand corner, hit that Options Tender logo, and subscribe. If you want to be a supporter, you get these videos intraday. I'm pushing that right now and letting people know. But if not, if you're not interested, you'll get the video at 4 p.m. anyway. So thanks for joining us. We're going to go through SPY on multiple time frames, the monthly all the way down to the 65. We're at a really big juncture here, so it's super important information as we look for the turn. All right, SPY on monthly time frame. There's some other names we're going to check out. SMCI, I released that members video so you can see how we got to our trade that we took there, and took a lotto trade in GME, so we can look at that too. All right, so go ahead and play the video at 1.5 speed if you are limited on time and get through this video. We have SPY on the monthly time frame. You see this wedge filling out. It's a bearish rising wedge. We're at the top of the trend line. We touched it in 2022. The end of 21 into 22, danced around here for a while. You see, we actually have almost 3 months of play in there. Might be a little more, a little less, but had our first rejection. So you could clearly see price can hold for a while, and it's not always a reversal candle and then follow through. I think, you know, that situation kind of gave us a clue that this was a corrective move, and price action was strong. People were still buying. That could still be the case here. All right, we're right at that resistance zone, and just be careful. We'll look for some signs of reversals, but you have to kind of be careful not to do too, I guess, I don't want to tell you how to trade, but just be careful of too short of time frames if you're doing an option strategy or not giving yourself enough time. But anyway, so sorry to ramble on there. On the monthly time frame, we're looking bullish. We have the 8 EMA, the momentum indicator facing up. We also have the 20 trend indicator. The trend is up, and you know, the momentum's up so far. We're into resistance, so that's why we have to be careful, but we're in a bullish posture. So naturally, people are buying the dip. And let's go down to lower time frames so we can see what might be happening next. We're getting towards the end of the week, so this is going to be an important time frame to look at. You see the top of 2021. You got the rejections and just bounce back and forth. Made this consolidation area, broke above, and then had a fake break, and that's what led to the downtrend. Right here, we tagged the upper trend line. We're starting to get a little bit of rejection off of it, so we'll be watching this very carefully. But other than that, again, 8 EMA rising, that's a momentum indicator, and we have the 20 simple moving average. So we do these videos often, so we get new information every single day, and so hit that notification button, and we put the story together so we can have valid trades. We're looking for the highest trades that we're looking for is where the bulls and the bears are both facing the same way. And I think that's the case where the bulls and the bears are going to be shorting this situation. So looking at the Elliott wave pattern on the weekly, you know, perhaps we get our top here and we start to correct, and we're looking for a time cluster around the end of July. So that might be a time frame, and this is just pointing in the direction. I don't know how this is going to unfold. Perhaps we get a head and shoulder up here. Maybe this is where we get a low, a lower high, and continue. That is our primary scenario. Our alternate scenario will show on the daily time frame. I'm not going to show it right here, but we'll be looking for, at this point, it seems, since we're continuing to the upside, we're looking for a top And I think we might be looking for some sort of short-term bottom at that point. So going down to the daily time frame. Daily trend is our friend. We'll take a look at traditional technical analysis. We're filling out this bearish rising wedge. We gapped right into resistance yesterday from the 2000 and 2022 top. And we're starting to get some rejection. It's a bearish engulfing. If we in here, we name these candles, but really what determines the candles is hindsight and getting follow through. So if we get follow through tomorrow with this bearish engulfing, then we can call it. So, maybe close the gap there. But at this point, if price goes back higher and we're limited on space to the upside, and I talked about in yesterday's video that, I was concerned with FOMC that we could have possibly gotten above the wedge tops and kind of overthrown and gone to our next targets. That threat is no longer there. Okay, we had the catalyst is passed. So now we're getting rejection off of here. And so this could end up being, if we gap up and get one new high, that could be considered a tweezer, potential tweezer top, bearish engulfing. But if we don't get follow through, then, forget about what it says. This isn't the be all, ending of this necessary move. We need to see follow through continue. We do have puts on at this time, and we have protection to the upside. We had it with Tesla. We had it with SMCI. We had it with numerous names, and a few of those names did not work out. Airbnb worked out for a minute, took some profits, and rolled out our position, and then had to it got stuck out of that position. So stopped out of that position. Excuse me. So this is kind of what we're looking at this point. This could go further. Like I said, it could make a head and shoulder, perhaps. Not in a straight line. But we should be looking to break this wedge eventually. And what possibly might happen after we start breaking down is we find some sort of bottom at some point. Maybe it's up here, maybe it's down here, and we start to back test this wedge. Now that back test could simply be a back test where you get a lower high and then continue lower. That's our primary situation. And let's take a look at that, where we have an ending diagonal. Okay, so if you're new here to this video, we're looking for an ending diagonal where this is an ABC for 1, 2, all three waves, 3, 4, and the fifth wave is made up of a possible A, B, C. Now, of course, we can figure out a different situation where this all is a 5-wave move, and that would be A. You get a B somewhere in here, however low goes. It can't break the low here, and then you go for the last move of a wave C to get to our last and final target at the 560 area. I'm not sure that's going to play out, but that's our alternate scenario. We don't have to get to that point. So we just about missed. We're in the zone. We just about missed this 150 extension from the 2022 correction, and so that's why I still think the market could eke out another high here. It's possible, has a little bit of room to run, but it doesn't have to. And so we want to protect ourselves if the market wants to grind up just a few more points up to it is towards the top of the zone at about 546. To tag that and then reverse, that's a possibility. And what also leads me to think so is we have a time relationship at 617. That's on Monday, Monday of next week. And so perhaps tomorrow, maybe we just have a corrective day today, and tomorrow we follow through, tag our target between Friday and Monday, and start to see a reversal from there. And then I'll show you on the lower time frame that we also have that relationship. So that's what makes me think. Remember, I constantly remind you, time relationships, you can't tell with time which direction the market's going to go, but when price hits that time frame, we can start to look for clues on whether we're getting a reversal or not. So today looks kind of flaggish. It's holding up. You have individual names that are just kind of, the market looks weak, but it's holding up the market. So let's go down to the 65 minute. And on the 65 traditional technical analysis, you again see this wedge playing out, and we got right into that target zone here that I had highlighted right to the bottom of the target zone. We have a little bit more room, and there's another fib up there at 547. So, that's a possibility. But again, it's anywhere in the zone. We could have a reversal. We could have ended now. But price seems to be holding well at the options expected move here. It looks very flags, very corrective type move. And so what could be playing out is maybe this is sort of the wave 3 end here. And then we're looking for wave 4 from this possible wave 1 here. So 1, 2, a long stretched out wave 3 where the extension's at, correction, and finish off with a wave 5 into the end of the week and beginning of next week. All right. Either way, we're looking for that correction to be over. Then we're going to be, excuse me, a little bit more bearish. And we're going to look for this wedge to break. Now, our mind frame, since we're getting to our targets, I want to think bearish. I want to have my puts out longer and longer dated than my protection. So that's the opposite of what I do when I think the market's going higher. So we're just about at our tops. We're reaching our targets. So now I have put plays out all the way out to July 19th, I believe. And we'll be looking for the end of July being sort of that bottom in a sense, but I'll have puts well out and I'll roll them out as price goes down. And our protection to the upside will be very short dated within, couple days to about 5 days out at maximum, just to protect our longer term positions to the downside. And we'll be using it with individual names. Maybe I'll put one on the SPY here, but on individual names, they seem to be in this topping formation to where the small caps or individual names that have been suppressed for a while, or even the meme names, want to have a burst of a breakout. And so, we took advantage of a couple of those already, and I think GME might be the next one to just hop again. I'm not looking for the breakout. We'll take a look at that in just a second. All right, so here's what it looks like on the Elliott waveform. So we have our time relationships that are the vertical lines, and we had one today. So it looks like today might be that bottom that we get with the 613 relationships that we have here. So I can get rid of these now that I've shown you. And now that's on just the 65, but the 617 has a relationship here coinciding with the daily time frame. And so that's why this one is so important. So if we just crash tomorrow into Friday and gap down Monday into the 17th, then I will be looking for a low, a buying opportunity. Okay. And then my puts would really have played out. If we grind up like we think we have with a little bit higher prices, and I'll also show you a couple other things, grind up just a little bit higher for wave 5 and into 617, then I'll be looking for a top. It's as simple as that. And so that's why we're protecting our puts, because we're already so close to that range. All right, you say we hit our target already, right? So why would we go any further? Well, first of all, it's because it's a zone. Second of all, there's other indices that are the S&P 500 that help hold the market. So here's on the SPX. We still haven't tagged that 1618. Okay, it's still just a little bit higher. It's we just missed it by I don't know, 10 points or so. Yeah, about 10 points. We missed it. And so this looks like a flag that might go to tag that, and that might be it. Now on the ES, we're not even close. So this is what I have to keep in mind when I think, well, hey, let me put on a different board here. So I have to think, we just hit our first target. All right, so if this wants to play out, this could easily play out to the 1618, which is the 5,560 area, which coincides with the 560. It's a little bit higher, but so there's room. And so that's why I'm thinking after a correction, I don't know if that's going to be shallow or a bigger correction, then price could possibly want to move higher. So that's what keeps, an open mind that this has not hit final targets and not even close. We're about 250 points, 230 points away from that target. But it doesn't have to go that high. All right, we already hit one main target here and we're at it right now. That's why we're getting a little bit of rejection. And perhaps we want to go to the 138 into the 617 into June 17th. All right, I've rambled on about that. That's my projection on the market. With VIX, then we saw VIX rising, so we saw a correction, a potential correction. Now this is a real steep kind of, or should I say shallow, divergence. We had a positive divergence. This may have played out already. Okay, so a little bit of a correction, and maybe this extends out a little bit more like a wedge that you typically see and get a new low here. And that would give us a new low on this point too. And that would probably create a daily divergence from this low to this low, and then an hourly divergence back down here. So that's when we'd really be looking to add on puts and really minimize the upside hedges, looking for that new low there. All right, so that's what VIX should look like if it's playing out. Now, if VIX continues to rise and starts breaking out from this wedge, then we probably already have a low in to here and a high in the market. All right, let's go check out GME. This was our trade alert that we had with the members today, the members and supporters, and it's very simple. I wasn't overthinking this. I wasn't looking at all the momentum on multiple time frames. We already know that GME broke key levels here around 15, had a huge base and broke out from there, had a huge move. And at this point, could be a simple B wave or a triangle 4, or it could just be setting up as a 1 2 1 2 and 1 2 and just continue the upside. But I don't really see too much of a bear situation. If you break down from these lows, then that could be it. And so we'll keep that in mind. Our stop's going to be right underneath this low here, because it's a nice triangle. So we have an A, B, C, D, E potentially done. And now we could see an impulse wave up here, but maybe not break out from there. So we're not looking for the breakout yet. This could just continue straight up, how it's a meme stock as a wave 1, or it can reject off here, get a higher low for an actual continuation where this triangle is done here, but you need an impulse wave up, rejection for wave 2, and then higher for wave 3, much higher. So if we break out from this triangle, then there's a possibility that we'll play it again, but we'll see how that goes. Not too thrilled about jumping in and out of GME too much, but I saw the setup here and wanted to share that with you guys. And it's not too dissimilar from SMCI. So just go ahead and watch the video on how we got this trade. But I do think this is a wave 4, and I go through the entire series of monthly, the whole analysis on and I'll post that video up top there. But this possibly being an A, B, C, D, E down here. And this really getting tight, like a wedge there, or triangle. And we broke out from that triangle today and just continued to move. I think it might have started to break out yesterday, but today really had the ramp up here. We're at about 11% move here, and I don't think it's over yet. But we're just playing this to the triangle here. If it starts to break out, then we can add some sort of other position, because if this is a wave 4 and we already have our breakout, then we're looking for a massive move to make a new high here. All right, so I know that some people could look for this being a 1 and then a 2 and a 1, 2 breakdown, but you break above these highs here and see ya, 972. These things can be vicious when they move. So that's our setup there. We don't have any targets on this because we're only going to here. But if it break out, the easy target and a breakout from the triangle is the top of the triangle there at about 1200. So you could use some debit spreads, or if you have enough cash on hand, you can obviously do individual contracts, open calls and stuff like that. So naked calls. That's all I got for you today, guys. A little bit quicker video than usual. I appreciate you all being here, and don't forget to support the video and like. I've had all this. You guys have been great. Appreciate you. Talk to you in the next video.